Forkast.News is your gateway to all things blockchain. We do the deep dive and the due diligence on the blockchain projects and platforms that matter, because we aim to be the most reliable source of intellectual discourse and insight that inform, educate, and bridge the gap between the blockchain industry and the mainstream. So we just wrapped the panel discussion on international regulatory cooperation in blockchain and cryptocurrency. And half an hour was not enough. So we've invited the entire panel from OECD, from IOSCO, from Bank of Lithuania, from the CFTC. These are incredible giants in this space, all in one room and confined space, and we continue this conversation. Starting with you, Marius, we talked about this being a product, right? And we had just left off on jurisdiction shopping. And you made the great point that as regulators, you are really trying to regulate or create structures that your specific economy requires. And that is going to be very different than somebody else's economy and vice versa. Is that jurisdiction shopping, or is that just fiduciary responsibility to your people, to your constituents?
Yeah, so picking up where I just left, Lithuania is not exactly the epicenter of the capital market. The depth of the financial market is such that, we're investigating, market abuse cases where a transaction of 200 on the stock exchange is moving the market and, ridiculous things. So then the ICO came into existence. Our Minister of Finance got, psyched. See, that's exactly what we need. It could jumpstart our capital market and, let's provide legal certainty and things like that. We as supervisors, we are very cautious, to be part of that kind of communication. But, it really jump-started the activity. Some of that, really made our eyebrows raised. But right now, what we are seeing is the market really maturing enough, and that is exactly the reason why Bank of Lithuania will be in next couple 2 weeks. It depends on how fast our colleagues will manage to do that. We'll be issuing a very detailed, you can say, manual, almost a manual, how security token offerings should be done. And when I say security token offerings, it exactly means it is a security, but being done in a distributed way. We came to that document after intensive consultation with market participants, the likes of NASDAQ, who see themselves being threatened by these innovations. How new way of raising capital or issuing financial instruments could be done using better technology. So that's what I meant. And that could be completely at odds with other jurisdictions which see that more as a risk type of phenomenon, as an opportunity, because they don't need those particular type of innovations because the capital market is already saturated, or the liquidity is there.
But that's from the point that Caroline made from OECD Blockchain Policy Center. When it comes to jurisdiction shopping, there are, as Marius said, there, whether or not that is the focus of one nation versus another, and then providing the opportunity to the broader market to shop. So Marius is talking about STOs, and he's going to provide guidance. What's the guidance coming from OECD when it comes to STOs and your member states?
So obviously we have two of the member states here with us, Lithuania and the US. And at this stage, this is a conversation we're still happening, and that's, I guess, one of the core functions of the OECD is that convening power to bring people together and share those different experiences. So Lithuania's guidance that Marius has just mentioned will be coming out in the next couple of weeks. We'll provide an excellent case study for the OECD to work with and to share with our member countries to say, look, this is one approach. And once they develop experience with that approach, say this is what has worked. And as other jurisdictions do the same, over time you could begin to see what might be considered as whether it be guidance or moving into best practice in a particular area. But I think Marius also makes a very good point that you have a lot of these issues which are country specific, which need to respond to the demands of the local community. Now, the result may be that you then have, from a industry participant point of view, opportunities to arbitrage between different jurisdictions. But that's something that we need to keep in mind, and that's part of the conversation we have with our member countries, to make sure that race to the bottom, which would ultimately undermine the work that all of us are trying to do and the policy objectives we're trying to meet, does not actually occur.
Okay, so Mike Gill from CFTC, you just heard from Bank of Lithuania. They're coming out with policy guidance on STOs. What is the STO guidance from the United States at this moment?
What is an STO?
Okay, so now we know the answer from CFTC.
So a different way of saying initial coin offering, initial public offering. So there is no guidance coming. I mean, the SEC has, they've clarified. They've clarified things that I think the market's already recognized by the fact that they came out with their Section 20A report on the Dow. They brought a few enforcement cases where ICOs were clearly public offerings to non-accredited investors and such. We put out a couple of primers on virtual currencies, and we just put out our Ether RFI that we're taking in comments. I just got the sort of comment file back on that to read on the plane. But I don't know that the U.S. is at a place where we're going to have guidance on initial coin offerings or security token offerings. I think right now the U.S. would say we have rules on how you are allowed to approach investors. And those rules apply whether it's a share offering, a token offering, or anything else.
Okay, it's an incredible market. There's no doubt about it. The United States, right? More than access to 300 million potential investors. But Bank of Lithuania might be a small country, also access to an incredible market called the EU. All right? So if we're going to get guidance from this side, playing devil's advocate, if we're going to get guidance from this side, is the United States kind of letting a country like Lithuania be first mover advantage when it comes to defining the rules on STOs?
I don't want to strongly argue that point, because I think you're correct, and this is greenfield, as Giles was mentioning before. That being said, U.S. investors will always invest under U.S. rules. Exactly. And so if a jurisdiction doesn't have comparable rules to the United States investors won't be in that market. So I think what's interesting with what's happening in this crypto space is that different European countries are taking the lead and sort of thinking of innovative ways to draw capital, to have a capital markets of another form. There's deep liquidity in the United States, in London, for capital markets of the form we've known for the last 40, 50 years. I don't think it's the United States' place to say, don't do that, do it the old way. By the way, you don't have those markets. I think we should watch this innovation. And if it's successful, I think we'll get maybe with these types of products where we're at with where we're headed with swaps. For a while, we applied U.S. swap rules all over the world. We fragmented liquidity. We're now recognizing that and ratcheting that back. So I think these markets evolve. But I think we watch. We will certainly not criticize it. But ultimately, whether U.S. investors will be able to participate will be something that will take some time to decide.
If I could just qualify your question and add a bit of kind of expectation management to that, Lithuania is part of the European Union, so we are not individually creating or bending legislation or nuancing it, but within the legislative framework, which is very clear and must apply across the board, across all the European member states, there are still very technical questions which sometimes are in the gray zone and no one actually knows the answer to. Just to give a very concrete example, if we all agree that that particular type of an instrument is a security, let's say we agree, it is based on DLT, meaning it is registered on a public ledger. Why do we still require, and we do require according to the CSDR regulation, it to be registered at a depositorium? How does the public ledger interact with the central record-keeping entity? These type of things, they require guidance. And it's not about, do you need a prospectus? What type of information do you need to disclose to the customer? How do you organize a trade facility? If it, what is the organization of a secondary market? This is very clear, and actually maybe we should stay away from giving guidance there. But that's what I meant, No,
that's good. IOSCO, we don't want to forget about you over here, Giles. All right, because you're doing some very good work as well. What kind of guidance or thought can you provide our audience, listeners, about STOs? What is the thinking from your neck of the woods?
Yeah, as I outlined, we've been doing our sort of thinking in stages. The initial stage was setting up forums to exchange information on different approaches, because as Mike's just indicated, it is useful for different regulators to see what everyone else is doing, because that's where they draw ideas. And if they say it's a good idea, that's how consistency arises. We've also done quite a lot of work in terms of issuing back at the beginning of last year public guidance about the potential investor protection risks that these raise. We hope we're now moving forward into the what and how area of coordination. We will next month be issuing a consultation report on crypto asset trading platforms and what the issues that different regulators should be considering if they're thinking about regulating those areas. And so the intention there is that in most of these markets, the central functions are the issuance and the secondary market trading, and then out of that grows the other functions, whether it's custodians, intermediaries, or asset management. And so we'll then possibly be thinking about the how and what in those areas down the line. I would emphasize that, we are also cognizant that the market is maturing, but not necessarily mature. And that also applies to regulatory approaches as well. As you said, some jurisdictions are able to move ahead with some very concrete proposals, such as Lithuania, Switzerland, and France have been mentioned. We'd hope that people, we can share experiences of those, and we'd hope that, as I say, if it's just details, that people draw on those in good faith for consistency. The second point I'd also make about this issue on the objectives. As you've indicated, there are the pie and apple pie idea is that everyone has incentive to have it's greenfield. Everyone has incentive to sort of move towards a consistent approach. But as you've outlined, different regulators within a jurisdiction may have different objectives, and smaller jurisdictions tend to have more of a provider focus, whereas the large markets will be thinking about the consumers, and that's not going to change over the time. But I think the way that possibly people need to think about it is that if it's a nascent industry, even if you're not a provider at the moment, you may be down the line, and that's where it makes sense to sort of maybe draw on the provider lessons that people draw. And secondly, if you're a large consumer nation, I think it makes sense for people to look towards what the consumer nations are doing in terms of if that's a gap in your regulation. So I think what I'm sort of trying to say is that by sharing information about different experiences, people can think about it holistically, how would I apply this if I'm just not both a small provider nation but also a large producer nation, and bring consistency that way.
I want to get a sense from all of you. How does Asia factor in specifically? And I'm not just talking about China, Asia, Japan, Korea, Singapore, Hong Kong, Vietnam, Thailand. How does Asia thinking from the regulatory end factor in for you?
Let's talk economics here. The global saving imbalances are accumulating exactly in that part of the world, right? Due to the international trade, the way the things have happened so far. And that means that, the savers or the people who have accumulated huge buying power, relatively speaking, towards the other side of the world, they are looking for investment opportunities, and they're looking for lucrative investment opportunities. And that exactly what is the driving force why the crypto community has developed exactly in that type of a world first. Because they have been offering exactly what people wanted, gambling type of activity, lucrative investment opportunities, promising the moon, which much more mature markets maybe have gone through 100 plus years ago. So that's exactly how I think the Asian markets with the huge accumulated wealth right now are featuring in this debate. And if financial institutions which are regulated by respective regulators here are being approached by that type of investors, we don't have the mandate to protect those type of investors. Maybe, I don't know. But we have the mandate to protect the financial institutions from that type of investors creating perverse incentives for our financial institutions to behave.
That's interesting. Mike, what's your thought?
Well, we've worked with Japan specifically, and they had regulations on crypto cash exchanges, I think for about a year and a half now. And we were very interested to know what kind of due diligence they were doing on those cash exchanges for cyber controls and such, because that's where I think at least our agency is the most concern is, what protections are there for the wallets, and the larger and larger entities are having custody of wallets, and that seems to be a vulnerability. And so we've worked with Japan on that. I think overall, I agree with Marius. I mean, there is an imbalance, and that money is looking for other opportunities. But I don't, I think when it comes to where this develops, and if an STO type product develops, I think it's going to be in Europe or in the United States that sort of capital raising. We've always been more comfortable with money going out of our countries and money coming into our countries, and that's the kind of culture you need for liquidity to develop these things. So we haven't done a lot on crypto with Asian jurisdictions besides Japan. We've historically registered clearinghouses in Korea, Singapore, Hong Kong, as well as Japan. We now have a clearinghouse that's on no action relief in Shanghai, but those are not cryptocurrency. Those are specific swaps.
Yes, I mean, I think as you both outlined, quite clearly in terms of the economics and the technology, in many respects, the center of gravity clearly lies in Asia. That's where the money is, and in many cases, a lot of the technology is more advanced there. I think the different perspective that Asia has compared with the US and Europe is that it's a more fragmented market from a regulatory perspective, in that it's got a wide variety of large, small, medium-sized countries that are applying their particular approaches, whereas the dynamics are almost easier to read in Europe and the US. In the US, as Mike's outlined, the main issue is different regulatory authorities with different objectives. How are they going to coordinate, or are they going to coordinate? In Europe, the standard mechanism is that particular European jurisdictions take the lead, and if it works, it'll be sort of rolled out perhaps through European legislation across the board. And therefore, it's easier to see the picture there, whereas in Asia, it's obviously harder to sort of see how Japan, China, Hong Kong, Singapore, how all these moving parts are going to arrive at a consistent picture. But certainly you'd have thought the economics and the thinking resides there, which is why we draw very heavily on our Asian members and the work we're doing in this area.
I wish this conversation could continue, and it should, and we will do this again. Thank you, all of you, from the top organizations in the world, to provide this kind of really candid clarity is just a breath of fresh air in this space. So thank you all. Thank you all.